All right, look, the Euro crisis is over. Greece has a plan that will put them back on a sustainable path for economic growth. You can go back to your regularly scheduled programs. Not really. And also the Dow, 13K, sitting out there like a ripe tomato. Will they pluck it today? We'll talk about that one. And dude, not enough for you buying Dells. Is that going to change? Maybe, maybe not. This is the Markets Hub. Good morning, everyone. Welcome here. It's Tuesday. We are back. We had yesterday off. President's Day. I had to celebrate that one. Now we're happy to be here with you. Got a lot of news. A lot of news. We're going to get to it all now because I have with me, to my right, Mr. Michael Casey. Glad to have you here today. And Matina Stevis. Now, Matina, you've been on the show a few times. Perfect timing. You're in town for a couple of days. Amazingly, we had some news on Greece overnight. Breaking.
Yes, well, I mean, we always have news on Greece. The question is it going to be the last news on Greece we get? No, it will not.
Well, let's talk about, overnight we had the EU finance ministers approved a deal. I have to put them in air quotes now, really, every single one.
Well, you've done that a few times.
I've done that a few times, right. Not a big reaction in the market. Across assets, really.
I mean, I think a deal was kind of priced, and the content of the deal, partly because of the hard work of us in Europe and everyone else around the world, and this organization were known. We knew what the details of the deal were, and now the deal is done. And
is it really done? That's the real question. Is it really done?
Right. Well, it's done on paper. So the Eurozone countries have committed to giving Greece another 130 billion euros, about $170 billion. They've said that Greece will restructure its debt. That will be paying for the private sector creditors slightly more than we thought originally. Instead of a 50% haircut, it's going to be 53.5%, in what seems to be a further concession by private sector creditors.
If they take that, right?
Well, that's the key question, right?
That is the key question, right? I mean, we know the parameters of the deal is basically the same deal they struck a few months ago. Are the private sector creditors really going to take this deal? Isn't that the big question now?
Well, I think the big question is how many private sector creditors will take the deal, and will the rest of them have to be forced in through the use of collective action clauses? That's where it gets kind of dirty and technical.
But critical, right? I mean, because if indeed these things are triggered, that is that Greece uses those clauses to force those who haven't participated to actually take this deal, then we get the big question, do we not, about what ISDA, who represents the credit default swaps operations, whether or not that's going to be a credit event. We get this whole triggering of CDS,
right? But even that is kind of contained because, remember, the market has had 2 years to adjust to this endgame scenario. Big banks in Europe that were originally very heavily exposed to Greece have unloaded. Some of their bond holdings have matured. A lot of movement has happened from Europe to the United States into hedge funds, and that has all been very good for systemic risk. In the Eurozone, meanwhile, we've had a chance to give Ireland some time. Remember, Ireland was the second country that got a bailout. Ireland's doing pretty well. Portugal, not so well, but Portugal, which is a third country that has a bailout now, Portugal is very small. So the Eurozone leaders and you know, the IMF as well, International Monetary Fund, feel that Greece has been kind of ring-fenced. What they've been trying to do for all this time has happened. The CDS market in Greece has a very low net exposure.
Really? Okay, and who has written? I mean, there's a whole question of net versus gross and whether or not that's which one we should be focusing on, but who has written most of that insurance? I mean, who in fact would be on the hook to make payouts?
I think that would be kind of, it looks like it would be an even split between insurance firms and some banks.
And we don't have like an AIG out there that's like sort of sitting on all of them. That's a big systemic risk waiting to happen.
Unless there is some crazy synthetic product out there that is kind of will go crazy if Greece implodes or if CDS are triggered. We don't think that is a big question. I think the big question is, going forward, what happens to the other countries? What happens to the currency? For now, this kind of we expect kind of a lull, a period of calm. It's all under control, guys. We're dealing with this. For Greece, really, prospects are dire.
Yeah, you just said talk about Greece imploding. Let's talk about Greece for a second. I mean, look, this deal will cut their debt to GDP ratio, if we're lucky, to 120% within the next 8 years.
Right.
The country, from what I can see, the country looks like it's mired in the middle of depression.
Right.
What are the prospects for Greece?
Well, I mean, the people who've written these programs, which are essentially the conditions for Greece to continue receiving money, are saying that it's going to get worse before it gets better, but it will get better. They're saying it'll get better in 2014. Reminder that Greece is in its fifth consecutive year of recession, projected to be in recession for the rest of 2012 and flat in 2013. That, according to some people, is kind of optimistic. We're talking 20% unemployment, 40% youth unemployment roughly, and a country in shock.
We've seen the imagery, you know, of course, this tends to dominate our perception to a certain extent of how the Greek population is responding to this, and it's all very negative, of course, with all the riots and the fires and so forth in Syntagma Square. How much does that reflect, though, popular opinion? I mean, where is popular opinion right now when it comes to the commitment to sticking in the Eurozone and continuing with the austerity program?
Well, I mean, by no means do the kind of images of violence from a very small part of central Athens reflect the majority of Greek opinion or emotion. I think there's a lot of despair and lack of hope in Greece. I think people really want to stay in the euro. I think the message has hit home that if there was a return to the previous currency, the drachma, that would throw the country back another 50 years. That message has gone through and has been kind of digested and internalized. Now the question is, how much more pain can they take? Especially those crucial middle classes, which in any developed country are really the driving force for the economy, small and medium-sized enterprises and the professional classes, who are getting beaten up from all sides, you know, taxation and consumption.
You know, Iceland just got upgraded by Fitch, you know, and we've seen other countries that have devalued, like Argentina, have a relatively quick recovery from what was initially a very negative response to a devaluation. Are there people in Greece, though, who are looking at that and saying, we should just follow the Icelandic route and get out of this? I mean, how much of a debate is there about that?
Quickly on that one, because we have to wrap this one up, Matina.
Well, there's definitely a debate going on. It's a lively debate about what currency Greece should have. But again, I think that sticking with the euro is what the majority wants. Polls reflect that.